right. Welcome back to another episode of the Me and Money podcast. For those of you watching on YouTube, you're going to notice there's a lot more people on this call today. So we're here to talk to a few trusted tax professionals that we just really admire the work that we've seen them doing on social media and just in their own practices. So we're going to let them introduce themselves, and then we're going to dive into some best practices as we look to take care of our 2024 tax return and maybe prepare ourselves for a simpler 2025 and make it a little easier on ourselves. So Ashley, I'm going to let you have the floor here for 30 seconds and just go ahead and introduce yourself.
Absolutely. Hi everyone. My name is Ashley Francis. I am a tax CPA in Seattle, and my practice focuses on high net worth, ultra high net worth individuals and their family entities, and also trust and estates, a lot of trust and estate work. And at the same time, I talk a lot about AI and accounting and financial planning and where that's going.
Love it. Well, there's a lot that we'll definitely dig into today on that front. Logan, why don't you go ahead and introduce yourself as well?
Hey everyone, I'm Logan Graf. I'm based out of Austin, Texas. I run a CPA firm, virtual CPA firm work with pretty much exclusively Texans. So if you're in Texas, hit me up. And I also have a YouTube channel where I talk all about how I run my firm as a CPA firm owner.
Love it. And you do some pretty funny videos too.
Sweet.
I love some of the ones that you had going on there when you first got on the social media.
You have to have some humor when you're talking about accounting or taxes. Otherwise, no one's going to watch it.
Fair enough. Well, I would, but maybe not the masses. And Alicyn, how about yourself? Why don't you just give a quick 30-second intro there?
Yeah, absolutely. I'm Alicyn McLeod. I am co-owner of Agate CPA. We work with a variety of small business owners, focusing on law firms and attorneys. We provide accounting, tax, and wealth management.
Love it. All right, Elliott, you want to lead us off with your first question? I know you were instrumental in bringing us all together, so why don't you kick it off today?
Yeah, and whoever wants to start with the answer, feel free to jump in. Otherwise, I will call on somebody. But otherwise, what are some common mistakes that you see people commonly make when they maybe prepare their own tax return? Or we could say that you see other tax preparers make.
Ooh, juicy.
Alicyn, do you want to start?
This is a really good question, actually. I would say just fundamentally the biggest mistake I see people make across the board is just not recognizing just how hard and complicated tax rules are, and not understanding that thing that they think is real easy is really, to get it right, is understanding dozens and dozens of concepts and maybe a couple of tax platforms and things like that. And so it's very easy to go, oh, I just click here, right? But it's garbage in, garbage out. We don't know what we don't know. So I would say that's not a very specific example, but like fundamentally, that's like the biggest thing. It's just not having an appreciation for just how difficult tax is to understand and get right.
Yeah. Can we dive in maybe a little bit deeper? Do you have a specific example that you mind sharing that illustrates that? I know I'm putting you on the spot.
The one that comes to mind, and I hear it all the time, but I still see it all the time, is not understanding equity compensation. So, if you get a $100 bonus from your employer, it makes sense. You get taxed on $100, you report on your W-2, yay. But if that $100 instead doesn't come to you in the form of a straight cash bonus, it comes to you in the form of equity in your employer, like employer stock, something like that. Those have tax nuances, a variety of tax nuances. And I typically see individuals, taxpayers, report that improperly and usually to their detriment, in a way that the IRS is probably not going to catch and going to be happy to let you pay extra tax on. But I also see a lot of tax professionals just not quite understand, and those rules can get really complicated really fast. So yeah, that's the one that comes to mind readily.
Great. Thanks for sharing.
Yeah.
Logan?
I saw some nods from Logan and Ashley. Is that something that y'all are seeing too in your clients?
So I'm in Seattle, like I said, and I see a lot of equity compensation issues. And I think across the board, folks aren't super clear because a lot of the corporations around here will use different kinds of comp to compensate folks. And so it makes for a really interesting pattern of compensation that to do tax planning, you have to know where each thing is going to hit when investing, and the opportunities for like setting aside taxes, making elections, things like that. So it is pretty complicated, and I know that a lot of the employers provide really clear information about what it means tax-wise, but you have to have the basis of understanding of what you're looking at in order for it to actually make sense.
Yeah.
Excellent.
Yeah,
Any
I'll echo
others?
the equity comp is like one of the biggest mistakes that I see on a lot of client returns, that self-prepare, because there's just so many ways to, there's many different ways it's actually taxed. And specifically like reporting basis for equity comp is always messed up, even though they give you the numbers pretty much exactly what to report. People don't know how to report it. But one thing that I saw this year with a lot of my clients is, when filing tax returns, we report on a cash basis for the most part for personal tax returns. And what that means, the money that you spend during a specific year is when that income is deducted, essentially, or, earning income the year you actually receive it is income. And this year, I followed up with so many clients who reported, property tax payments. And I was like, hey, can you provide support? Or I'll go look on the county website and look, all right, did they actually pay property taxes in 2023? And most of like a good amount this year, I noticed they were either paid in 2022 or 2024, and we can't deduct those property tax payments. And I bet a lot of professionals would probably just use that number that's given. Like, oh, okay, they had this much property taxes. Well, I go a step further and I'm like, did you really? And so I verify it, and I find a lot of people are trying to deduct 2022 or 2024 property taxes when they pay them in that year. Just because it is for 2023 doesn't mean you get to deduct it whenever 2 years down the line or 1 year early. And so that goes to the case for a lot of other deductions as well. Like, oh, I received this income, I cashed this check in 2024, so we don't need to report it on my 2023 return. What does the tax form actually say? You actually received it the year before, so we're reporting it on that tax return, not this one.
Yeah, that's interesting. That's actually something like I've seen a lot of errors in some of my clients' returns, like, especially if they're self-filing on TurboTax or whatever program they're using, because it says, well, here's what we have on file from 2022, right? And so it just starts self-populating or assuming these things about 2023, or if you screwed up the number in 2022, now you're really going to be off in 2023, and so on and so forth. So have you seen a lot of that too, with like people maybe working with a tax preparer for the first time or a tax professional, where they kind of have like these compounding issues in their returns? I see Alicyn.
Yeah.
Yeah.
I see that in maybe 2 or 3 areas. One, if there's anything that needs to carry forward, because some forms that you fill out as part of your tax return, they feel like they're just, superfluous information only, but they actually can have a tax impact. Like if you've made non-deductible IRA contributions, you want to carry that basis forward from year to year. If you have a capital loss that you don't fully consume in a year, you want to carry the rest forward from year to year. And I've seen sometimes where folks will use like a TurboTax, or sometimes they'll hop around from like a H&R block to another H&R block or something, and those carry forwards get missed. And so I'm not exactly sure how they get missed inside the software, but I do see that sometimes. So like, again, you think that's not important until that year you have some capital gain and you'd like to offset it, or you go into retirement and you'd like to have some basis on your taxable IRA distributions. And some of those, they're meant to carry forward kind of almost indefinitely, right? At least within the context of this conversation, indefinitely. So if you miss it in 1 year and the person that you work with the next year, or even if it's just you preparing again, if you don't look back at your prior year tax return to find those items and compare and make sure that they're part of your current year return, they're probably permanently gone. And I've seen large capital losses, for example, fall off tax returns from year to year, which is why when we onboard a client, we typically ask for 3 years of tax returns. There's a few reasons for that, but that's one of those. Sometimes we'll go back to that 3rd year and we're like, you have a capital loss of $500,000. Did you know that? And they're like, oh, yeah.
That's painful.
I think
to
I
miss.
see that the most with asset additions. So when folks are adding assets to depreciate year over year, well, let's say they buy a rental house, a rental property, and then they just put the whole thing on there to depreciate, and then they include the land, which has never been depreciable. So then when they go to sell it and they go work with a professional, the professional has to do a lot of work to fix that land that has been depreciated and do a method change. Or alternatively, they never depreciate it. So they purchase something that's depreciable. It's never been depreciated. They go to sell it, and the law isn't did you depreciate it or not. It's even if you didn't depreciate it, you could have. So then you're filing for another method change to try to pick up that depreciation against the gain, because you're still going to recognize the gain. Like, depreciation reduces your basis, so you're still going to lose that basis even if you never recognized it on your tax return. But can I answer the first question? Because I have a very exciting answer. At least it's exciting to me. And I think it's going to be exciting to everyone else too that's listening. So the thing that I see the most from self-prepared returns or returns that are prepared by other preparers is folks don't always know what kinds of accounts that they have that are kicking off income. And I always made the joke that, like, anytime I pull a transcript for a client, I will find accounts on there that they didn't even know about. And the problem is I'm pulling the transcript from the IRS. So the IRS knows about it. And if the IRS knows about it, they want you to report it. And so there's income coming through that people don't know about. I even have this with clients that are my clients. And they're like, oh, no, we didn't take out any money from our retirement accounts. This is everything. And then I'll pull their transcript, and they would have pulled out like $50,000. I was like, okay, well, this is income. And so to everyone listening, I would recommend you go set up an account with irs.gov. You can set up a taxpayer account. It's super, super heckin' easy. And in there, you can pull your wage and income transcripts for a whole bunch of years. And there's lots of different kinds of transcripts. But your wage and income transcripts will tell you all the different kinds of accounts that kicked off income to you. And you can also see notices that they put in there. You can set someone up to talk to the IRS on your behalf. It's a really fantastic account to have with the IRS. I'd recommend everyone set one up just so you know what the IRS knows about you. Because you don't want to be surprised by notices, or be surprised when the notices never got to you, but the IRS still thinks you owe them money.
That's an insider tip if I've ever heard one. I'm still processing that one. That is great, Ashley. Thank you for sharing.
So if I'm understanding, like, even if I didn't file, like, let's say I have a high yield savings account and I didn't file that, 1099 INT or MISC or whatever, whichever one it is, that would show up on my tax transcript because the IRS would know. Interesting. So it can always be used as like a checklist to help make sure I have everything. Yeah,
that's what I use it for. Requested for on behalf of my clients, is because, okay, so the funny part is I was joking that everyone has something on there that they don't know about, and then I pulled my own and discovered that I had one on there that I didn't know about. So it's like, you just don't know about these accounts that you've opened up a while ago or someone's opened up on your behalf, but the IRS does, and you want to be on the same page with the IRS.
Yeah, no, that's really, that's super helpful, and that's something, like, I'm going to add that to my client onboarding packet. Like, I usually ask for the tax returns, but now I want the transcript too, because there are those things that clients just, they forgot about or don't even know they have, or something like that. It happens every time.
Yeah.
The other thing clients forget about that is on their transcripts, not that transcript, a different transcript, is their estimated tax payments.
Mm-hmm.
Every time, especially if they made them a little bit earlier in the year, that's like, it's always wrong. And I think clients should tell us what they paid, and then we should verify it against the transcripts. I hate going straight off the transcripts because it's possible, because it definitely happens. You make a payment and the IRS misposts it, so it clears, but it doesn't land on your account. It does happen. But it's a nice place to start to see if somebody has an overpayment from their prior year tax return that you want to apply to the current year. And it's also a good place to see if they made first, second, whatever quarter payments.
I normally just PDF when I make an estimated tax payment and give that to my accountant. Do you feel like that's a good system?
Yes, that's a great system. That's 1 out of 100 people do that, Elliott. Good job.
Yeah, I would say that I have provided tax vouchers with instructions. Pay this. Here's the link to the IRS direct pay, all of that. And then the client receives a notice after we file a tax return that they owe money, because they were just like, I just made all the payments that you told me to make, but it's over an entire year, and like people don't always remember. So definitely pull that tax transcript. But then also you can set up your estimated tax payments to be automatically paid if you're kind of like one of those forgetful folks.
Yeah.
Yeah.
A lot of my clients are those forgetful folks. I am too sometimes. Like, I remember I was going to Italy this September, and we left like a few days before the quarterly payment, and I was just like, oh my God, thank goodness I remembered like the day before we were going to leave for Italy that quarterly tax payment was coming up. But that's good to know too. How do you set up those auto pays? Is that just like through irs.gov?
I know for myself, it's through my tax software, and you have to be really sure that you want to do it because you can't undo it once you do it.
That's good to know.
Yeah.
Yeah.
Well, should we move on? I feel like we've tackled a lot with when income is received, when you're paying property taxes, equity compensation, pulling tax transcripts, a lot of common mistakes that people are seeing. Matt, should we go to the next question?
Yeah, and I think this is, this will be helpful for myself as well as for those listening. But, we hear a lot of these stories of, there's a shortage of CPAs. I've certainly seen it when my clients are asking for referrals or recommendations. It's certainly gotten more expensive to work with a tax preparer over the last few years. I guess before we jump into like how people can best work with a tax preparer, like, would you want to speak into those trends at all? Like, what have you been seeing? Like, is it all just a myth that it's getting more expensive to work with a CPA? What should folks out there know or expect when they consider working with a tax pro?
I would say the first thing is that there's EAs as well. So you don't like EAs are certified by the IRS to prepare tax returns. So you're not just limited to CPAs. There are also enrolled agents. And then I think Logan was going to say something.
Yeah, it's true. We are getting more expensive. So when I first started my firm about 4 years ago, my price was about $450 for a personal tax return. And now it's, $1,200, $1,500 to get into the door. However, there are still those old schoolers that are charging, $200 to prepare a return. So you could probably still find a good deal. The thing is, do they know what year it is? And do they know the tax changes that have happened in the last 5 years? So you do want to be wary of your super cheap tax pros, because what signals to me when they're really cheap is that they have way too many clients to deal with. They don't have any time to get the up and up on tax law, tax changes, and their quality probably isn't that good. They're not taking time to prepare your return. They're going to be doing it as fast as they can because they have literally thousands of other returns to prepare. They're making good money, probably, but is it a good quality product. So be wary of the really affordable tax pros out there. Quality usually follows price, in my opinion. Not all the time, but it's usually a good gauge.
Yeah.
Yeah.
Hey, Logan,
Go ahead, Elliot.
that brings up another question that I think has been thrown around in the financial planning world a lot. And I'm curious for anybody to answer this question. What is an appropriate number of tax returns for an accountant to prepare per year if you had to do an average? And I know that's really hard because everybody works in slightly different ways in what they're offering, but maybe in the ways that you're doing it, what would be an ideal number?
Without burning out.
Oh shoot, I only prepare about 150 and I feel like I'm burning out. So I just did an analysis of how many returns I prepared between January and April, and it was only about 90 returns. It wasn't that many returns. And there's preparers doing hundreds of returns by themselves during that time. Now, granted, mine are a little more complicated. Small business owners, rental properties, so they take a little bit more time. But I take a lot of time to review my work and try to do everything right. A lot of follow-up questions. But that's a really hard question to answer, Elliot, because you may just have a one W-2 activity return where it literally can take like 20 minutes essentially, and you can churn those out really easily. Even still though, just a W-2 return can still take a long time. Crazily enough, they can still be complicated because we have that equity comp potentially, or maybe an HSA in there it's reported incorrectly, or dependents in there as well. So it can get stupid complicated, stupid fast with just a W-2 return. I'll let somebody else talk.
Ashley, what about for you? Number?
I will say that I have strong opinions about this one, but they're probably more on the Logan side than anything else. So I have fewer tax returns that I prepare than Logan does because my practice is focused on very large entities, individuals, trusts in the States, like with a lot of things going on. But I do know that there are those folks out there that are like 500 to 800 tax returns a year. And the challenge is that it has to be a very specific practice with a very specific client base. And nothing, like they cannot go and do anything different. They can't, like these particular clients can't suddenly like do crypto or decide that they want to do all the solar credits, or because like you have to be able to get through them quickly. I do want to ask though, how does that conversation get framed in the financial planning world? Because I know that I have, like, I feel like there's this conversation between financial planners and tax accountants because there's kind of a mismatch between how our professions work. But how does it come up in your world?
So I have personally seen it in places that I've worked who have built out tax practices of trying to answer the question of how many people can an accountant work with. And that's sort of why I was bringing it up. But I also know planners who have thought about, and we were talking about this before hitting record, but bringing in a tax practice or marrying the two, how that works. And I think there has always been at least from my perception, financial planners not understanding why accountants shouldn't be working with 500 people at a time. Like in my mind, it makes perfect sense. I don't know how you get through 500 returns and do quality work and get clients to understand what's going on personally. But I know there are others in the industry who see that and go, oh yeah, 500 returns, no problem. That should be an easy thing. It's never made sense to me. So I wanted to throw it out to you three because you're the experts here.
I know Alicyn has feelings about it, and I have feelings about it because we've had conversations together about. So I'm going to let her take this one.
I I totally understand why financial planners want to offer tax services, right? I mean, this is the whole point of our conversation is we're discussing that it's hard for folks to find good tax help, and you see your clients struggle with that, and why not solve for it? And then you start to dig in and you realize, wow, this is a really, really different business model. It's lower margin, it's higher effort. It has sort of a different perception from clients, right? So it's just quite different. It can dovetail very nicely into financial planning, but it's very different. It's not dissimilar, I think, from say accounting and tax. Those are often put together as a service for business owners, but those are wildly different business models. So yeah, I think it's something to look into and something to consider. And I think we certainly see this more and more, especially in larger spaces, large accounting firms bringing in wealth management, large RIAs, et cetera, bringing in an accounting firm, like we're talking in the hundreds of millions, billions of dollars. So why not do it at our small levels too? I think it has pros and cons. I think it can work really well for clients, to be honest. But then there can be drawbacks, especially if something goes wrong. But I think back to your question about how many, consider, how big is the firm? Our firm does 600 tax returns in a year, but we also, it's not just one person, right? So kind of consider that, and again, what is the size of each client? It's really a hard one to pinpoint, to be honest. So I would be, if you were shopping around with with a financial planning client and trying to find a good tax person for them, that's not a metric I would really try to measure toward, to be honest. Yeah. I think it's probably unhelpful.
Good point.
Well, and I think, for our general audience, this could be just a good chance, from the three of you, if they were interviewing someone to do their tax preparation, what would some good questions be for those who might be approaching a tax preparer for the first time? Besides, how many returns do you file? How big is the firm? What other types of questions would you suggest they ask?
I think the biggest thing would be, how do I work with you? Because that's been, I feel, with the folks that come in, the prospects that come in that work with me, one of the biggest things I ask is, how do you work with your own information? Because I have a portal, an online portal, and I request your information through digital documents. If you don't have a scanner and you don't go on the internet and you never check your email, we're going to have a really tough time working together. And then I would also ask them to be honest with themselves about how tidy they are in their own personal finances. Because if they're going to a tax professional and expecting them to do the tidying up work of their finances, thinking back to this idea of keeping everything in a shoebox and then dumping it out on the table, and then this CPA sorting through all the paper, they might want to find somebody that is more hands-on, that offers that sort of support, and ask how much it's going to cost, because it is expensive to have a trained professional sort your receipts for you.
Mm-hmm.
Oh, and then one more thing before anybody else jumps in. I would ask their specialization, because if a small business came to me, I would be like, I've got names for you, but I don't work with small businesses because they are their own niche. To me, they're the folks that specialize in small businesses know a lot about small business tax law, whereas I know a lot about weird investments and buying an island and trust and estates. So I would make sure that the tax professional that you're talking to actually has clients with your particular flavor of tax law, because it's not all the same.
I love that. That's a great answer.
Logan, I would try to establish expectations. So, what's your communication turnaround time or preferred method of communication? If I email you, when can I expect an email back? Because I get a lot of new clients these days. Like, it would take 2 weeks for my accountant to respond to me. So like, I'm looking for another person, and that's pretty common. It's crazy. You just have, like, to run a accounting firm these days, you just need to respond in a reasonable amount of time, and you'll get a lot of clients. It's crazy. So, and also maybe like expectations on the services provided, because there's a lot of mismatch on what clients expect you to do and what they actually are paying for and have signed an agreement for. Because a lot of times they'll be like, "Hey Logan, like, did you file this payroll report?" And I'm like, per signed agreement, our proposal together, we have nothing to do with your payroll report. So please contact your payroll provider about that, not me. And so we have to, even though we have like signed contracts, it's important to be on the same page on what your accountant is providing to you. Are they just preparing your tax return? So if you ask them a question, or if you ask them a tax question, are they going to answer it? Or are they going to be like, "Oh, sorry, you got to pay for that," Because sometimes the expectation will be there where you do the tax return. Okay, you're going to handle this complex tax question for me now for free. And that's not the case for probably all of us on this panel.
And it shouldn't be. Yeah. Alicyn?
So I would say a few things, kind of expanding a little bit on what Logan and Ashley said, and also a couple of other ideas, is just ask what their process is. Like, what is your onboarding process? What is your intake process? Again, if talking about turnaround time, if someone says, well, during tax season, you might not get a response for 3 or 4 days, maybe that's okay, right? But it's not if you don't know it. So, what does it look like to work with you? Who is on your team? What's their role? You don't have to get too in depth, I don't think. But I think you're just looking for the other person, the CPA, the EA, whoever you're interviewing, to have a plan. They should know, oh yeah, here's what it looks like when we bring on a new client. That shouldn't be a hard thing for them to start talking about. Just to know that they have a plan, I think is good. The second thing, again, to kind of what Ashley was saying, is like, what does your sweet spot client look like? Again, if you hear, oh, it's equity comp, but you're over here, running a, 8-figure a year law firm, like, well, okay, maybe that's not you, right? And just because the person you're talking to doesn't do that, doesn't mean somebody else at their office doesn't. Again, you could be talking to somebody that works at a 100-person accounting firm, right? Like, so everybody's going to have a different conversation, but you want to make sure that you fall somewhere in somebody's sweet spot, right? Because that's when you're going to have a better chance of getting better service. Going back to Logan's point about, responsiveness. People are responsive to their A clients, right? So, you want to be their A client. Ideally, everybody would get the same responsiveness across the board regardless, but if that's not going to be the case, then you want to be in the A client list. Again, I think this is kind of what Logan's saying, is what's in the engagement letter, what's not. If I was interviewing somebody to be my tax advisor, I'd probably phrase it like, my tax return's been filed and I have a question. What happens? What's the process? I get a tax notice. What's the process? I have questions about my current year tax situation. What's the process? And again, are there additional fees? There might be, there might not be. Can I get on your calendar? Maybe, maybe not. What does that look like? And some people, and this is totally fine because tax is somewhat seasonal. Some people will set up a shop, they'll work January through April, and they don't want to talk to you the rest of the year. And then they'll see you again in January. And honestly, that works great for lots of folks. But if that's not going to be you and you're going to want ongoing support, you would like to know that like before you engage this person and you start working with them. And I think to Matt and Elliott's perspectives, what I would also ask if I was interviewing a tax professional is how, if and how will you work with my financial planner, my attorney, my banker, my insurance person, like whoever those people are that are really important to your team. You'll find a lot of tax professionals don't even understand that question. Like that's not part of their thinking. It's not part of their business model. Again, that's fine. But if you need that collaboration, you can't hear an I don't know to that question, right? You need there to be a clear answer. It needs to align with your objectives.
Yeah, that's awesome. Yeah, and I kind of want to go back to what you're saying, like with the A clients, or are you in my sweet spot? Like, obviously, there's different specialties and niches or niches, however you want to say it. But what are some other things that I guess hallmark like what a client is? Like, how can people engaging with a tax pro or a tax preparer like make it easier for their tax preparer, and maybe make it so that every time the email comes through or the phone rings, it's not like, oh great, here's this person again, they're going to be a pain in the butt. What are some of those things that they can do just to make your lives easier?
I could tell you. Okay, so I have clients that don't read my emails that I send them. And it's not like I don't send that. I don't send a ton of emails. It's not like I like sending out communications for just no reason. And so having to chase down another grown adult to get information to do the thing that the grown adult is paying me to do. And then when I contact them and they say, I already sent that to you, I'll cry. And I wear makeup. And you don't want this. Like, you don't want this. So, like, that right there puts you on a list. If you're rude to anybody in my firm, or that answers the phone, or to me, if you're just, like, if you're hard to, like, talk to, that puts you on a list. If I ask you to like, hey, can you get me this very vital piece of information, and you argue with me that I don't need it, that puts you on a list. Because, and this actually goes to Logan's point about the engagement letter. Tax professionals, tax CPAs are one of the highest litigated professionals. And so, like, people don't love to sue tax attorneys. They love to sue tax accountants. And we're also regulated by the IRS. We're overseen by the FTC. Our, like, CPAs, we have our state societies. I'm sure there's a couple other people that, like, are looking in our backyard. So when we're asking for things and we're putting things on your tax return and we sign your tax return, we're signing it as your tax preparer, which then adds a level of, like, we can go to jail, we can get fined for misreporting. So if you make it hard for us to do our jobs and then we're going to get sued or go to jail, we're not really going to love you. And we want to love you, because otherwise we wouldn't have, like, wanted to work with you. So that's kind of my big, like, don't put us in danger, and don't be rude.
So be a decent human being and don't send your accountant to jail.
Yeah, and then also get us your stuff, please. Yeah. And not just the first page, and not just every other page, and not as a picture. Do not send us pictures. Do not send us Apple pictures, especially, because Adobe cannot convert those. Send us a PDF. There's a PDF app in every phone. It's in your notes, but a lot of us have portals that also have apps. Just send us PDFs, and don't send us one PDF of every page. Called PDF 1.
I was going to say, I don't know if you noticed that, but I don't know if you noticed that, but you send a PDF, not 20 PDFs,
right? And they're like, yeah, and, like, then I have to figure out if they're the same documents or they're 3 different like, just, yeah, that stuff. Sorry, I just got excited for that second there.
No, this is this can be, group therapy here if that's what we need for bad clients. Absolutely. Logan, Alicyn, anything you'd want to add to that?
Yeah, just be nice and follow directions. So pretty much what Ashley said. Like, I love clients that will respond in a nice way to something that I have no control over, and are like, okay, here's everything I need to do. Got it. I'm going to do it. And then they do it. And then it's like amazing.
Yeah. Don't shoot the messenger, right? Like, yeah.
I just reiterate what Logan and Ashley said. I totally get it. I think our tax systems in this country are way, way, way more complicated than they ever need to be. when Congress says, don't worry, we'll make this simple, guess what? They will absolutely do the opposite. And I think for most folks, when they think about it, not only is it often insulting and a hardship to pay those tax dollars, it's really insulting to have to pay somebody to help you figure out how much you should pay. So we absolutely know this. And those of us that enjoy helping our clients, you know, we certainly adhere to our ethical framework, but we're in our client's corner. We're trying to get the best answer for them. So I would say, you know, assume good intentions on your tax advisor's behalf. Whatever it is, assume, you know, they are trying to look out for you. We are really, really, really poor communicators. We will do work. We will do hours of work behind the scenes. We will never ever charge a client for to get them $5 off their tax bill or something. Like, we will look and hunt and peg, and we will never tell the client we did that. We are not good marketers. We're not good communicators, but so many of us are often working so very hard to put our client in the best light from a tax perspective. So, you know, I would just say again, you know, be kind, show grace, assume good intentions, assume that person that is on the other side is really trying to look out for you in ways that they just don't even bother to communicate because it takes them so long to do the thing that they don't want to also add communication time on top of that. Yeah.
Thanks for sharing, Alicyn.
That's great.
Let's move maybe to the next question, Matt.
Yeah, go for it.
I want to talk a little bit about tax compliance versus tax planning. And Ashley, I'm going to start with you because you threw out this question for us.
Yeah, no, it's a great question, and I guess I could say that because I'm the one who came up with it. And this kind of like touches to what Logan was saying about what's included in the engagement letter, but there is tax compliance, which is basically I'm going to prepare your tax return and it's going to get done, and I'm going to give you some vouchers for your safe harbor estimates if that's, or, you know, throughout the year I'll check in with you and we can update that and you can know what you're going to have to pay for estimate. And then there's planning, which looks at you as a whole tax individual, and it covers, I would say, not only your income in this year, but it looks at all of your assets and what kind of income they will generate at some point, or if there's an estate tax implication. It will look at, are you in the best situation? Let's say, I don't know if everybody knows, but there is a little bit of a panic around the size of traditional IRAs because they're getting so honking big and they have to come out at some point. Like, they have to. And so, like, a big tax planning exercise right now is Roth conversions. Which year do you do it? Like, how does it impact over the long term? And then how does it hit the estate, like your estate tax planning? So I think a lot of like tax professionals just deliver tax compliance, but they're so nervous to talk about tax planning because that's an additional cost to the client, and actually costs sometimes more than the tax compliance because it's not a plug and play thing. But tax planning is what clients value more. But they don't know it's not included in the engagement. They just assume that, I don't know if they assume, but a lot of times they're like, well, I have a tax professional and they should be doing tax planning for me. And to Alisyn's point about how bad we are at communicating and marketing, as tax professionals, we're not bringing it up because we've gotten so many times, well, I don't want to pay for that. But there are, even if it's not a significant savings this year, it could be a significant savings down the line, or it could put you in a better cash flow position down the line, or a better estate planning position down the line. So I would say folks are having the conversation. If they're going to be talking to a tax professional ask them what their tax planning looks like, and if it's included with the tax compliance, and if it's not, what does it look like outside of that? I had another really great point, and I'm going to come back to it, I'm sure, because I forgot it. Okay, yeah. Someone else go. Yeah, I'll remember it in a second. Logan,
are you going to jump in there? Sorry.
Yeah, tax compliance is, it's reactive. So there's not much you can do towards your tax situation with filing a tax return. However, tax planning is proactive. So that's when you can actually make some moves, because you're probably in the same year the tax return is going to happen. So right now it's tax planning season, December, and there's a lot of tax planning meetings happening. And we can do that because we can still make decisions that impact the 2024 tax return. For once it's after year end, there are some things that you can do when it comes to like retirement contributions in the next year for the previous year, but you're pretty limited, like versus being able to make decisions in the year that tax return is going to be reported on. So always, if you're about to make a pretty decent decision, always, just pass it by your accountant first. I've had a situation where a client who was paying for year-round access to me did not tell me that they're about to sell a rental property that was part of a 1031 exchange, and if they had just gave me a heads up, like, "Hey, Logan, we're about to do this. Any thoughts?" I would have said, "Wait 14 more days, because then you'll save $10,000 on taxes, because then you'll have a long-term capital gain instead of a short-term capital gain." And fortunately, they didn't consult me. And so waiting a couple more weeks could have saved them a lot of money. Unfortunately, you can't really undo that.
Yeah,
that hurts to hear.
Yeah, that's a tough one. We see that sometimes on those brokerage statements too with incoming clients. It's like, oh, you should have just waited 3 more days, but darn. Yeah.
I remember what I was going to say. This one is a PSA to all of your listeners. There are people out there who purportedly, that's all they do is tax planning, and you will often see them on TikTok driving very fancy cars. I have had people DM me asking if I will take on the multitudes of entities that have been set up for one-time, like, tax savings. And because, like, these folks will set up a ton of entities, charge a lot of money, get you this one-time tax deduction, and then you'll be dragging these entities along because these folks don't actually understand long-term planning. They get their money from setting you up on these schemes. So if you see them on TikTok and they've got a Lamborghini and they're telling you that you can deduct your vacations, or that if you put it in a trust, it's never going to be taxable, do not believe them. Okay, Alicyn, your turn.
Yeah, all that. I think there's a lot of confusion around who can help you with what. So, for instance, we're throwing around this term called tax compliance. We know what that means. Nobody knows what that means. Tax compliance means somebody's actually preparing your tax return for you. That's what that means. You're complying with the tax rules by actually submitting a tax return. And then tax planning or tax strategy, I think those terms kind of get used interchangeably. But hopefully that's someone that helps you on the front end. But who helps you? Is it the same person who prepares your tax return? It might or might not be. That person may or may not be able to help you with that. And they might or might not know that they might or might not be able to help you with that. They might think they're a good tax strategist, but they actually don't have enough knowledge to help you. You might get tax planning from your financial planner. Your financial planner may be super sharp on the tax side. They just aren't set up to do tax return preparation because that is its whole other thing. So as a consumer, it's a maze. Like, ask ChatGPT where you should go. But seriously do that. But because ChatGPT is so great at helping you solve problems and framing them out. But, ask yourself, what is it you need help with? Is it help managing your tax situation? Is it you need help getting your tax return prepared? Is it you need help understanding the tax consequences of your long-term financial planning goals? Like, there could be a variety of tax needs that you have. Like, write them down and then do some research. Ask around, who are the people that can help me with these things? Who do you already have on your team? Who do you not? I think that is probably one of the biggest issues, because a lot of times I've seen clients where they might have had a quote unquote investment manager, which is basically, somebody who sold them life insurance one time and, takes them out golfing once a year and is their buddy and just made a lot of money off of them. They think this person has like their tax situation under control, right? Like, a lot of times they do, sometimes they know, this person doesn't, but sometimes they just don't know. So there's a lot that goes into both tax world and that goes into the financial planning world. It just makes it really hard for consumers to kind of understand. So break it down to its most simple components. What are all the pieces in the tax process, if you will, that you might need help with, and then go start looking from there. So that's what I would say about, like, in terms of like how the average consumer of financial services should think about quote unquote tax compliance versus planning.
Yeah, no, I think that's really good advice. And I think that's one of the reasons why I never want to do tax prep. I think it's really helpful just to have like a second set of eyes on it. Like, I don't know this stuff as well as the three of you do, but my clients don't expect that of me. They just, they expect help on the bigger picture and some of that tax planning stuff, not the tax compliance side. So I think that's, I don't know, for me, it's a peace of mind knowing someone else is looking at it too.
I will, if I may be so bold, I will put in a plug for two sets of professionals. One is CPAs who do financial planning, or EAs who do financial planning, tax people who do financial planning. Those are unlikely going to be people that just do a tax return and are done with you, because they know more, they see more, they're not going to be able to help themselves, but try to help you. And then I'll put in a plug for financial planners who go an extra step to learn about taxes, especially the ones who get their enroll agent designation, because those are the people that don't just talk about taxes. They understand, and they're not trying to advise their clients to do stupid things. Like Ashley was mentioning about, just shift this money here, this money there, make this investment because you get a quote unquote tax write-off. Like, they have a better understanding of how taxes actually work, what ethical rules around tax return preparation actually are. They're not going to set their clients up to fail when it comes time to present a sort of investment, if you will, to their tax person to put on their tax return. And the tax person's like, oh no, not this. So I think as we, from whatever perspective, as we weave more of the other into what we know and do, we help clients better. So I would personally say, if you're shopping around for a tax advisor or a financial planner, find one of those that knows a lot about the other.
I think that is a good place to wrap up, Alicyn. And speaking of plugs, where can people follow along or get in touch with all of you?
Oh, I'm on LinkedIn. That's where I stay tidy. So Ashley Francis, there's two Ashley Francis CPAs in Seattle. I'm the cool one. So that's
we'll be sure to link. We'll be sure to link to the cool one in the show notes. Yeah. Logan, where can our listeners find you?
Yeah, I'm on LinkedIn as well, Logan Graf. I'm on YouTube, Logan Graf Tax, and also on Twitter.
Great. Alicyn.
I'm Alicyn McLeod. I am on LinkedIn, and oddly, there's another Alicyn McLeod in tax. She's spelled differently. I can't make this up, but she is not me. I've had some people say, "Did you just like create a bogus LinkedIn?" No, it's a real person. So LinkedIn is probably the best place to find me.
That's not your TikTok burner, is it? The other one.
My handle on my sadly never used TikTok account is Atlanta Tax, which is my handle on Twitter and Blue Sky and all the other places. So if you want to find Atlanta Tax somewhere, I'm sure I've said something horrible about S corporations and other things throughout the years on social media.
Love it. Well, thank you all so much for joining us today. It was awesome to have you on, and I hope our audience found at least one nugget to take away and maybe, help make this tax season a little bit easier than past ones. So thank you again so much for all of your time.
Yeah. Thank you, Ashley.
Yeah.
Allison and Logan.
Thank you.